This is another one of my trading, theories, strategies, whatever you want to call it. But there's just different ranges, and the way that the market reacts to certain ranges can be predictable, and it can turn your accounts into some money-making opportunities, okay? Now, nothing is 100%, not financial advice, but I do look at this all the time, and I really wanted to break it down for you, okay? So this is time range aspects. Okay, so this is range, right? This is how to trade ranges. Usually it's more like price ranges, but this is just how I look at it, okay? The times that are of interest are yesterday's highs and lows. What was yesterday's high? What was yesterday's low? That'll be a range, okay? The other ranges that I tend to look at are the first 5 minutes. I used to really go hard on the first 5 minutes, and it would seem to play out, fairly well. But when I shifted to the first 15 minutes, it definitely seemed a little bit more impactful. And then even better than that is the first hour. Okay, so when I say the first 5 minutes, that's from the open in the morning and then to the first 5 minutes of the trading session. Then the first 15 minutes of the trading session will be a separate range, and then the first hour will be a separate range. Okay, honorable mention that's always interesting to look at are the highs and lows of the Asian session from yesterday, the highs and lows from the London session yesterday, and then also down here it should say the highs and lows of the New York session from yesterday. But that just goes into yesterday's highs and lows, okay? So the range, right? So let me just show you what I'm talking about real fast. We'll look at TradingView so you know what the hell I'm talking about as a range. So we'll go to today's open. So I'm on the 1 minute chart. You see where it started right here at 6:30, and then we go boop, 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 all the way to 6:35. So the range for this would be, this is, which candle is it? This one? So this is the high, and then this is the low range for the first 5 minutes of the market open. All right, and then let's go, right? So what does this mean? This tells me that basically what happened is the market came down. We created the low, the floor. We came up, we created the high. We rejected the high. We bounced back down to the bottom, and then we ended up breaking down here. Not a whole lot of action this morning. There was a lot of news, so not the best, but this is an example of a 5 minute range. What would the 15-minute range be? 15-minute range is about the same, actually. It was just a little bit further over here. But we hit the floor again, bounce back. Okay, cool. So that would be the range, though. Okay, so when I'm explaining this, that's what a range would look like. If you're trying to figure out yesterday's high and low, there's actually a indicator, daily high, daily low. Green bar up here was the daily high from yesterday. This black bar down here was the daily low from yesterday. Okay, so we're in a very big range, right? Yesterday's low, yesterday's high. We have not broken all-time highs either, which is way up here. Okay, but that would be the day's range. Okay, so this green bar right here, yesterday's high, yesterday's low. You can do it on the indicator. Today's high, today's low. It just started over, right? But those are the idea of these time ranges, okay? And these time ranges, there's only 4 things that tend to happen inside of these time ranges. Really, there's 5, but the 5 is just sideways or chop. And you never really want to trade the chop, so we're not talking about that. So let's say for the first 5 minutes of the range, what happens is we open to the upside, we set the range, right? And then finally we break above the range, then we retest. Here at the retest, once we see confirmation, we want to enter for a trade. Okay, so that's if it breaks up to the upside. What's the second thing that could happen? Okay, well, what if we open up, we set the 5 minute range, and then after the 5 minutes, I look for what happens next. I see that the range breaks out to the downside. Boom, boom, boom. We retest that range, and then we have proof of confirmation that we're going to continue going down. This is where I would enter the trade, because you always want to enter the trade on the confirmation. Sometimes I'll get in, though, at the breakout, and then I'll just know that it will retest, and I'll pray that it confirms, but that's not right. The correct way to do it, enter the trade on the confirmation, as we will probably continue to the downside. Here's the other things that it could do. So let's say it opens here, it gives you the 5 minute range, right? Once the 5 minute range starts, now let's say we go back up to the top. We cannot break to the upside. We don't have the breakout. We will return down to the open, right? And sometimes you can enter when we start to return down, because we know it's going to go all the way to the bottom, but that's kind of risky because sometimes this likes to pull back a little bit and then fire off, right? So the best thing you can do is wait for it to hit the top, come back to where the open is. do a little bit of a last upward time, a little bit more of an upward move it, and then clean it out. And you wait for the confirmation that it's going to go down. Boom. This is going to be an easy way for you to determine that we're going to the downside. So you would want to get in here, and it will continue sometimes to the downside. We may also stop here at the open, and we might stop here. Okay. This formation is not the best. Okay. It's not ideal. The main thing we want to look for is if we have a breakout to the upside, that means we're going to go up higher. If we have a breakout to the downside, we're going to go lower. These inside moves, right, they're a little more risky. Okay, this means that we're kind of going sideways. But the reason that you have to know them is because we can't always expect to break out to the downside or break out to the upside. Sometimes we have the reverse, right? And honestly, I was listening to this one guy. He's a very professional trader. He's been doing this for a long time. He trades options, and he says that 70% of the time, when we break out in a certain direction, the markets will retrace and go the opposite direction after the first little bit of the open. That's interesting. Okay, that's interesting to me. So just remember that 70% of the time, the markets will reverse after the breakout. And we'll look at a couple examples of this after this. I just want to get this through your head, though. Okay, so they set the 5-minute range. We will break out, can't break above the 5-minute range, break down, and we know we're going back to the bottom of the 5-minute range or 15-minute range or whatever it is. We get the range, okay. We break down. We'll probably come back to the open of the range or whatever the open of the market was. Come back down, and then we will get the confirmation that we're going for higher highs. Now, here is the holy grail of this whole experience, okay? So, don't buy the dip. Don't buy the breakout. Buy strength after the dip when the VWAP from previous high is taken out. It tells us with 100% certainty the buyers are in control, okay? Now, this is a little bit different than the ranges I just told you about, right? And you might be like, why would you tell me this? Because this is the bulletproof trading system that we need to talk about. So this is the daily high. We came up. It says, don't buy the breakout, right? Don't buy the dip. So we came up to the daily high. We could not break through. We fall back down, and we say, don't buy the dip, right? Then we kind of chop around here. Buy here where the strength after the dip, okay? And then here's the VWAP, right? Or this blue line is the VWAP. So what do? We hit the higher high, right? We hit the yesterday's high. We came back down to VWAP. We broke the VWAP, and the VWAP is where a lot of the big money sits, okay? The big money buys back in at the VWAP, and then we power off, and that's where you want to get in. Okay, so let's look at a couple examples of these ranges. Right here is a great example, I guess. But we came up, we hit yesterday's high, we broke down. Now, as soon as you see that we broke through VWAP, you see that we just kind of chopped around and we kept trying to break back past VWAP. So there really was no big moves until right about here. And this is just all green candles. That's a pretty good symbol that we're moving to the upside. Other big green candles down here as well. Okay, so look, here's where we hit yesterday's all-time highs. We broke through, then we bust down. We end up going down below VWAP a ton, right? And then we start to retract back to the VWAP. Now, this is a big green candle bar, so you could have gotten in here once we break past the VWAP again and then gotten out up here. Let's see, that's like that's a 20-point move. That's a solid move. Okay, then we break down below the VWAP again. That was a good, would be a nice short. Real big green candle back up. Then this is really where you want to enter, okay? Now, how would you know to get into this? This green, just nonstop green candles is pretty much what the indicator for me is. Lots of green candles, couple red candles, keep moving up. But this was a long time since we hit the yesterday's high. So, but the reason that you want to make sure that it hits yesterday's high is because that's confirmation that we are still in an uptrend. Okay, so let's look at this range now. Going back to the 5-minute principles. Okay, or the 5-minute. Here's the 5-minute range from the open. Right, there's the high. Here's the low. Okay. Now, again, and when you see this in real time, it's different than when you're seeing it on the back tests. But we open here, we form the top, we can't break the top, we come down, so that's 1 point. But then you can also see you wait till the 5-minute range is over, right? Then we hit the bottom, and now we're going back up to the top. We push, we finally break through, we retest right here. Now we can get in, and we ride this puppy up all the way up to here. We could have, right? 902 from literally here. Super solid though. Okay, this is a great example of that 5-minute range that I was talking about. Okay, so you have to let the candles form the range. Okay, so the 5-minute mark is right here, right at this one. So now the 5-minute range is over. And what do we do right after the 5-minute range? We break the 5-minute range, then we retest the 5-minute range, and then we confirm that we will continue to the upside. We only, you could have got a little bit scared here. You pretty much would want to put your stop loss below the after it retests. You would put it below here, or you could put it below VWAP, and then you would just let it run, right? Beautiful, beautiful range. And then let's look at the hour of the day. Okay, so for the whole first hour, because the first hour pretty much sets the tone for the rest of the day, this would have been the range for the first hour, right? So we come up, we hit the range, we do not break out, and we end up basically doing that thing where we come down, we return to where the open was, like I said, literally at the open. Look at that. Here is the open. So we hit the top of the range, we come back to the open, we bounce, we try and hit the upper range again, cannot make it. Come back a little bit lower this time, we bounce, up, down, up, down. Anyway, here's the hour range. You see when we finally break to the upside, we don't really have a lot of momentum, I guess. But at least we were able to clearly see that after the first hour of the markets being open, here's where is it, 7:30. We've hit the top, and now we're coming down. We know that we're probably going to try and retest the bottom, right? We know that. And then once we come to the bottom, we know we're probably going to at least retest the top again of the range. Bada bing, bada boom. We finally do break the range here. Big power candle, lots of chop, 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 chop. And then we finally get a little bit of room, and we just take off. Let's look for one more of these, okay? We had this huge move. We hit the daily high, busted way above it, broke back down below VWAP, came back down below it, and then now we can look for a time to get in because we are obviously still picking it up. You would want to wait till we cross VWAP again, cross VWAP here, bam, huge explosion to the upside, crazy trades. Basically, the idea is that if you're living above the VWAP, you're looking for moves to the up. If you're living below the VWAP, you're looking for moves to go lower. A lot of the times, though, here's one. We hit the all-time high. We came back down. We kind of flubbered around it. Came way down below the VWAP. Finally recrossed the VWAP right here. Boom, upward momentum. Because this is a confirmation to us, right? We hit the all-time high. We moved below the VWAP. We came back. We crossed the VWAP with a powerful green candle and volume. Absolutely to the freaking moon, right? That's how you can tell that we are still in an upward momentum. So we didn't buy the breakout because the breakout was a fake out. We didn't buy the dip. We bought when we got the confirmation that we were going back to the moon. All right, this is very, very powerful. And you can do this for it doesn't have to be the daily range. It could be for those 5-minute ranges. It can be anything. But the VWAP does play a very important part. All right, I hope that video helps. I'm glad you can do it. Go make some money. Let's do it.